Hi, my name is Bill Mason from Mason & Mason. I'm a real estate attorney in Garden City, New York. I've concentrated my practice on transactional real estate for the last 25 years. And today what I want to talk to you about is co-op due diligence from an attorney's perspective. Okay, so I think the first thing to start with is an understanding of what a co-op is. So unlike when you buy a piece of real estate and you're actually getting a deed to the property, or a condominium, you have a deed to the property, when you buy a co-op, you're actually buying personalty. You're buying shares of stock in a corporation that owns the real estate, okay? And then you're getting what's called a proprietary lease, which gives you the right to occupy that particular unit. So when you're dealing with a co-op, it's particularly important that you retain an attorney that's going to be able to do some due diligence about the co-op before you buy. Now, the reason this is important is just like investing in any stock or any other business, if it's not properly run, it'll, affect the value of the shares you own. It'll basically come out in the form of you having an assessment or a maintenance charge increase. And some of the things that, could happen is, you don't do the due diligence and you find out later on that, they need to replace the roof on the building, okay? And it's a multi-$100,000 issue. Or in the city of New York, there are a lot of rules with regard to the facades of the building, and you have to have inspections every couple of years. And when the building is coming up on one of those inspections, you have to be prepared and they have money budgeted to address facade issues. There's issues with regard to the efficiencies of boilers. There's issues with regard to when they're doing repairs in the building, you may not have the access that you usually have. Perfect example is we just did due diligence on a co-op in Manhattan, and they're replacing the elevator cabs, and they're going to be doing this project for a couple of months. And during that period of time, none of the people are allowed to do any renovations to their apartments. So my client was buying an apartment that needed to be renovated, and completely didn't work for him to buy an apartment and then have a 3-month span before he could start the renovations. So we would go ahead with the project. Okay, so what I did was I put a little list together of things I think you should discuss with your attorney. What we do at Mason & Mason is we reach out to the management agent and we send this list in writing to the management agent, and we put together a little report. So when the time comes to review the contract, that we have this for you to go over with us, and it gives us the ability to give you something that you'll have to always refer to in the future. So the things that we start off with is we ask for the last 2 years' financial statements, we ask for the audited budget, we ask for a copy of the offering plan, we ask for the house rules, and we ask for a copy of the application to purchase. So I think the first thing you want to do is make sure that you have your client look at, or the buyer, look at the application to make sure that they're okay with the fees, because it usually shows the fees that the co-op will charge. A lot of times there's a flip tax. And one of the things you really want to know is, in addition to the traditional closing costs you're going to incur, what costs are the co-op going to charge you, okay? So then the first question that we have on our list is we ask the co-op management agent to verify what the co-op charges are, okay, each month, or the maintenance. So that's the maintenance fee that they charge to run the co-op on a monthly basis. We ask if there's any assessment. So an assessment is something I touched on before. That's when they have an extraordinary circumstance come up that they haven't budgeted for. And you want to know if there's an assessment going on now, how much is it, how long will it go for, okay? And you want to then also ask them the questions, is it any planned or proposed assessment in the future, or maintenance increase, okay? So these are things that we usually start right off with when we're gonna move forward, okay? We also try to ask when was the last increase, okay, for the maintenance, and if there was any prior assessments, so that we get an idea of, do they always ask for assessments? Is that how they run the building? And we get an idea of what to expect as far as a maintenance increase on a yearly going forward basis. So then the other thing that we look at is does the building have what's called an underlying mortgage? So when you buy a house or a condo, the only mortgages that you're going to have is your own mortgage. But here you got to remember that you're investing in the stock of the company that owns the real estate. And it's likely, not always, but likely that this co-op corporation that you're investing in is going to have a mortgage on the property, okay? And so how does that affect you? Well, the way that affects you is that mortgage, you're paying that back in your maintenance. And a lot of these co-op mortgages have been refinanced recently with very low interest rates. And commercial loans are not like residential loans where they're fixed to 30 years. They're adjustable. They usually go for 5 or a 7-year term. And so what you have to look at is when was the last time they refinanced, how much is the loan amount, and when is the loan ready to reset, right? Because you want to look at, is the carrying charges in the building going to go way up if they're refinancing a loan from a 3 or 4% mortgage to an 8% mortgage on an $8 or a $10 million underlying loan on the building. Okay, so now the next thing I would look at is how many rentals are in the building and if rentals are permissible, and is there a rental application, what are the guidelines for the rentals, these types of things. The things you want to know, even if your buyer is not going to rent or it doesn't intend to rent, because buildings that generally have less tenants and they're more owner-occupied tend to be better buildings. And I can tell you that banks definitely look at that way for financing, and banks definitely have a criteria of the amount of rentals that they'll allow in a building for them to be willing to go ahead and finance in the building. Okay, so then another thing that you want to look into, especially, I see this mostly in Manhattan, is does the property that you're buying the co-op in lie on what's called a ground lease. So what that is where the co-op corporation is actually leasing the land that the building is built on, right? So if that's the case, you need to be a little bit more careful. You want to be able to review the ground lease and see how long the ground lease goes for, and are there terms in the ground lease that allows for it to be renewed. You really need to get an understanding of what happens at the end of the ground lease, because every year that that lease is being used up, right, the value of the property is going down if there's not a pretty definitive statement in that lease of how that they could renew the ground lease, okay? I touched on the local law 11 a little bit earlier in the video, which is basically you want to find out if that inspection's coming up. That's the inspection at the facades of the building, which they can be very expensive repairs and can greatly impact the financials of the building. We usually also ask, has there been any history of bed bugs or rodents in the building or in the unit in particular? The neighboring unit or our unit made any complaints about any issues, whether it's leaks or anything else like that in the last 2 years. You never know what comes up with that. You should find out sometimes that they have complained about music or any other type of thing. You want to also find out if there's any lawsuits against the corporation, or the building has any judgments. It's not that big of a deal. If there's a personal injury lawsuit, you see those. Generally, it's covered by insurance, and I would be concerned if it's a major lawsuit and there's not enough insurance to cover it. But what you're really mostly concerned about is lawsuits where there's no insurance coverage and will have to be paid out of, basically the monthly maintenance. So those are the general things that I look for. It's not a complete list. I don't want to make the video so long, but it's a highlight of the most important things that we look for when somebody is buying in a co-op. And I hope that you enjoyed the video. If you have any ideas on other topics we can speak on, we would love it. And you can just comment below and also like and share. Thank you very much.